Market right here in 80 now with me, Aisha Faridi. I've got Sajit Manga joining in the studios and Snehi Shah as well. And pretty much the same story for the market continues. Was no different yesterday. While yes, towards the mid-session, when you did peak out at the day's highs, one felt that the market is going to manage to sustain to the gains. And then came that vertical slide in the last half hour. And then from there, we just about barely managed to hold our head above water, just about 30 odd points or so. Serious bout of profit taking, be it in the consumption names, be it in private banks. They were not supportive of the market in any case from the word go. Technology, some of the blue chips like Bharti, L&T, etc., they all succumb to the fall. And Sajid, that's the point, right? The market is really unable to stay put at the higher end of the range, which it's been in for months now.
That's true. Consumption was one of the things why the market was not moving. Now the consumption is back because of the GST.
Then also it's not moving.
Then it's also not moving. And the best part is that the Q2 is going to be a washout for many of the companies because people are holding off, especially consumer durables and others, where people are holding off to that. Though many of the companies have come out and said they're going to put offer the entire pass through of GST, but they're saying that it's going to happen from September 22nd, and that's something it's little negative for some of the companies, for especially Q2 earnings. Now, your Q1 earnings were muted. The Q2 earnings are going to be again muted, which basically means that your FY26 numbers are going to be readjusted for this fall. You're not going to get the entire impact of this revenge buying in the next few months. There will be some kind of holdback of consumption which will happen, but the festive season is there, so you're going to see some kind of that. But what was interesting yesterday, Aisha, was the market fall that happened at 230, 245. Suddenly we saw the plunge, and that was happening because of the Nifty bank. We saw HDFC Bank, ICICI, SBI and Axis. Again, it was led by this Nifty bank fall, which led to the Nifty falling from the top, the Nifty bank falling almost 300 points from its day's high, and it looks like it was an options play which happened because of which we saw this kind of sharp fall which is in this market there, especially with these 4 or 5 stocks, which and especially because Nifty expiries today, the weekly expiries today, right, Tuesday. So that's something which is being played at.
Yeah, absolutely. And that resistance that we always hit when we get closer to 25K at an index level, and like you were talking about yesterday as well, right, that the FI long positions are already at a 2-year low. So I wonder, after so much, what's going to make them come back? And just technically speaking, why this 25,000 and each time that we recede from there?
There is a strong resistance which is building up at 25,000. But yesterday, if you look at the options, it gives you a good indication of where the markets are heading, how the traders are positioning themselves in the market. We saw some kind of unwinding happening with respect to call in the 24,700 and 24,750, where open interest has fallen for the current week's contracts there. We saw additions happening in 2700 or 24,700 and 24,800, which gives you an indication that yes, there is an up move which is expected, and that's what is also reflecting in the long positions because it has moved up or inched up to roughly to nearly 7.98% or so close to 8%. So there's a slight bounce which is there. The positions have been taken by the put writers in such a manner that they can go up to 24,800, but there are technical factors which are at play. So you're going to see good some kind of resistance happening at 24,900 and 25,000. And Kunal, when he joins us, he's going to explain to us where is the market headed from here. But it looks like a range of between 24,700 and 25,000, and that's something is a sideways movement as we speak.
Okay, so that's some important levels to watch out for today. But other than that, if you take a look at the global handover, it's not been all that bad. We've seen a decent global handover coming in. You have the Dow and the S&P both up 0.2. Nasdaq has inched up 0.5% almost, and a fresh record high for the Nasdaq also coming in. And so is the case for Nikkei this morning, after we've heard all the geopolitical development and in fact their own domestic political situation as well. So all eyes are on that. Nikkei has crossed that 44,000 mark. Other than that, gold prices, once again an all-time high coming in. Lots of US macros. The CPI number is due later this week, so that is also going to be important to watch out for before that 16 and 17 September Fed meet coming in. But Sajid, gold once again at record high. What is this an indicator of for the global equity market?
It's also indicative of few things, which is one is the US uncertainty which is coming in, and so there is a diversification of assets which is not only done by fund managers, but also central banks are doing it actually. Central banks are sitting on huge reserves, especially if you look at the RBI, which has been, very active in terms of diversification, which has been confirmed by the finance minister as well, that RBI is looking to diversify assets. We've been buying gold in a big way so that we can diversify from the dollar and US Treasury. And that's something which the central banks are doing there. If you look at gold hovering around 3680 odd levels, which is there, there is a lot of buying which is coming from People's Bank of China, which China is trying to diversify its gold. You have roughly around in July alone 10 ton of gold which has been bought by central banks, and that's compared to, and that's seen as a very moderate increase, given the fact that over the last 6 to 8 months there has been a huge buying which is there. So the July numbers are very very muted in that sense, but over the last 3 months, which is May, June, July, roughly around 160 odd tons of gold has been bought by central banks, and that's something staggering, because it shows the kind of uncertainty which is there. India alone has brought in all the golds which is lying overseas, because they fear, because if there is a sanctions because of linkage,
the geopolitical
our
front.
linkage to Russian crude could bring in some sanctions, and our gold could get stuck. So over a period of last 1 year, when Michael Patra was the deputy governor, he started this process of getting gold back into India. So that's something which we've been also doing.
We were all intrigued how they actually do that, though.
Yeah.
How did they physically get so much gold into the country back?
Yeah.
But let's take it across to Ashesha, find out what the global commentary has been overnight.
Well, yes, on the back of that BRICS Nation Summit that happened yesterday, we have some commentary that has come in from White House Trade Advisor Peter Navarro.